All right, looks like we're finally getting this range to expand. It's been a while, it seems like about a week and a half we've been stuck inside this range. And finally getting that expansion means we can start moving towards 73, 74, 7,500. If it ain't broke, don't fix it, right? We just passed the SPX call wall. The hero on spot gamma really didn't change all that much. We've got a lot of dealer gamma positioning right here, and they didn't roll out of it, so it's still there. They're very likely just sitting on it to see how we close today. There is $11 billion of notional gamma value sitting right there on that call wall. 11 billion sounds like a lot, um, but it's not that bad. Yeah, what's up? Let me adjust. Let's see why. Output. I bet this is it. You might want to turn it down a little because I'm going to crank it up. Let's try that. Is that a little bit better? Yeah. How about now? You hear me now? It it was all the way down at the bottom here, so that was probably why. I do. I mean, I see that some of the ones that you send, they had earnings or they're about to have earnings, and a lot of times I'll dismiss those, you know? Sure. We are in a very unusual market, and that's really throwing people off, you know? The typical tools that we look at are giving us mixed signals or wrong signals. Um, I was listening to Bloomberg this morning and they were talking to multiple analysts, and every one of them was so impressed with um, the valuation of the Mag 7. Not all of the Mag 7, but a lot of them. They're like, wow, it's so cheap right now to buy the Mag 7. I'm like, yeah, in fundamentals. But if you wanted to go in and buy the stock, or even worse, try to buy the options, they're crazy expensive right now. Yeah, that's where tip ranks comes in. So on my screen here is a website called Tip Ranks, and you can go to a particular stock, and then you can see the analysts' forecasts for that stock and how accurate they are and how often they give a call out. So this way, if they're just a paid mouthpiece and you can't trust them, you'll see it because they get it wrong, 50% of the time or more, and they don't, they're not worth even considering. But you are right. You got to watch the analysts out there. A lot of them, they're not talking their book. They're just doing what they're paid to do. Yeah, you can go here and then you can rank them by, the ones with a high score, a high ranking. And then if you're looking for bullish trades, bearish trades, you can sort it by that. And then you've got your upside targets. And do you want a human analyst or are you willing to do any AI analysis? And then you see what they've got, right? So it's not bad. It provides more context, and for people who either don't have the time or just don't know how, then this is a good way to get some analysis on a stock. You know, you can check out dividends, earnings, ownership. You can look at their financials. It's not bad really, and it gives you the projections between the high and the low, or the average consensus of where it's going to go next. And that way you can kind of gauge, even just looking at the low end, if I'm wrong and I buy it here at $300, where's it going to go on the low end? It says it could go to 248. Okay. And then if I'm right, where's it going? 350. Okay. So it just gives you some ideas where the stock might go. Yeah. There's a lot of tools out there, that we can use to get trade ideas or to analyze a stock. That's really what I like to do. I like to analyze something, ask as many questions as I can, try to have a solid understanding of what price is doing. And that way I can kind of gauge what I think it's going to do next or how likely it is to do whatever it is that I think it's going to do. Kind of been my approach for a while now. And then I try to run best practices on the options trades that I take. And by that, making sure it's liquid, that I trade near the money or at the money options, that I try not to pay too much, watching the cost of the options, make sure that they're not crazy expensive, that it's a fair value. That's not always easy to figure out in options, but a couple of tips and tricks kind of help out there a little bit too. The nice thing is there's so many styles of analysis that we can do. I got to get logged into this one too. So for an example, if we want to sell options on things, there's strategies that look for products with a high implied volatility. For an example, they make good credit spread trades where people go out and they try to sell premium. I'm not a big fan of that strategy myself. I know it's all over the internet. A lot of gurus talk about it, but I think they're missing the obvious that it doesn't work. And you're putting trades on things that are very likely going to move with a trade that says, I bet you don't move. Seems like a recipe for disaster to me. But there's also other places that come up with some pretty neat trade ideas. Like this is Spot Gamma. We've been talking about it in the Discord quite a bit. And they've got these squeeze candidates, and then they've got these VRPs. And VRPs is kind of that same idea that these options are more expensive than their peers. And so they make for good things to trade, so to speak. The reason I like this better is it's not looking at the stock and asking, hey, is this stock running with a high implied vol? It's asking, hey, are these options more expensive than the other options that are out there? So it's kind of the same logic because you would sell options on either side of that, but it's looking at a different thing. Instead of looking at the implied vol of the stock, it's looking at the implied vol of the options. They do have a description of these. If I remember right, get it to hover in the right spot. I can get the little pop up. Maybe I got to go into the scanner itself. Yeah, there it is. So we come down here, go to volatility risk premium. That's VRP. So now that I'm in the VRP, I can sort through sector ETFs, high IV percent change, high gamma, top delta, or whatever this is, cross asset summary. I haven't used that one, so I'm not sure about that. But you can go in and choose basically what stock list it's going to search through. I don't usually pick anything on that, so whatever's hitting the scanners. And then there's this list. So I know that any of these that I would want to look at are going to have expensive options. Now I can use that for a disqualification if I wanted to. Maybe I want to trade one of these stocks and I realize that it's got overly expensive options and then decide, well, maybe I don't want to trade them after all. Or if I was going to sell options, it tells me what strike I might want to pick since those strikes would likely have a higher cost. If I was going to sell them, you want to sell the more expensive ones. 130 calls or 104 puts on SOXL, for an example. And then it's got a gamma squeeze. So instead of a squeeze like we would typically think, the Bollinger and the Keltner and price going inside of it like a TTM squeeze, this is using a different squeeze. This squeeze is looking at stocks that have a potential for explosive upside moves based on short interest, gamma levels, options volume, and a proprietary spot gamma formula. It's a combination of all those things. So the levels that it's measuring is a gamma squeeze, not a price action squeeze. Not bad. Yeah, I can use any of these tools to look at Tesla. Let's say, let's go to Hero. I think I can put Tesla in the Hero. This would look at options and Tesla today, which might not necessarily be what you're interested in, but you didn't tell me. So I'm just gonna assume you're looking at today. Yeah. Well, I'm looking at Tesla here, and they've got a lot of options buying that's been running steady pretty much all day. It started to pick back up after 1 o'clock. It kind of stalled out around 11, and then about 1 o'clock, it came out of the stall and it's been grinding higher. The stock really hasn't gotten too much higher. I mean, it's above this key gamma strike now, which it was stuck underneath earlier. So it made it above that, and it has continued options buying. Can't really disagree with it. Yeah, it's very likely going to reject that 50, but if it stays strong, it'll be a small rejection and then it'll continue to press. There's a call wall at $400. There's a put wall at 350, and you have a key gamma strike which we are now above, which was at 380. We crossed that today. The hedge wall was 375 and we're above that as well. So it's pretty much smooth sailing into 400 if you're only looking at the dealer positioning and the options. Now, for me personally, I don't tend to buy calls on a green day. And if I do, I go intraday and I look for some red candles, preferably multiple red candles, so that I can see the cost of those calls drop before I buy any of them. And that's because if you just go in and there's a trade drill that I learned from Jigsaw that talks about just watching. And I never really thought of a drill where you just sit and watch stuff as being an active participant, but it works. So if you go in and you watch how options prices move, when we get a green day, the calls will just get jacked up, right? So much premium is in there. So when everybody's hitting them and buying them and they're all fighting over the ask and the bid and the price just keeps going up, you get a couple of red candles intraday and you can shave off a lot of that fluff just with a couple of red bars. It's not that great in equities as it is in something like the SPX, but it's there. But if you look at how much those calls change on a red day, it's quite significant. Now, my idea of buying calls on a red day isn't so that I don't lose. I don't waste my time scrambling for ways to not lose. It's just a waste of my time. Trades lose. There's nothing we can do about that. But when I buy a call on a red day, if the trade is a loser, that call won't depreciate as fast as if I had bought it on a green day. So buy it on a green day, tomorrow's red, that call gets whacked really hard. Buy it on a red day and tomorrow's also a red day, sure, that call's going to lose some money, but it's not going to lose as bad as if you had bought it on a green day. And so that's why I do it. It has nothing to do with, well, if I buy them on a red day, I won't lose as often. No, no. If you get the direction wrong and you buy calls because you think the stock's going to go up, buying it on a red day isn't going to solve that problem. But it will make the losses less, and they won't lose as bad as fast. Sometimes it doesn't feel like it helped all that much because options prices can change really fast. Even if you buy a call on a red day, they can still change pretty bad. But on average, that helps with the losses because the losses just aren't as bad. So that's why I tend to do it. Now, on the other side of that, too, a lot of times when it comes to reversals, for an example that I like to play, if I'm thinking it's going to be one of those reversal bars, getting it on the red day gives me a chance to get in before we get that explosive push. Now, in the example that I just grabbed here, that wasn't very awesome because the next day it gapped all the way up here. That's where it opened. And then it slammed all the way back down. Well, thanks for nothing, right? If I was willing to trade the open, I probably could have traded it somewhere up there, but more likely I'd have just been in it. And at the end of the day, it closed lower than the day that I bought it. But after that, we had this beautiful move and then that big breakout bar, that monster bar. I have found that getting in on the red days has helped me participate in those kind of moves way more than getting into something that's already on day 2, day 3, day 5 of green bars. And then I decide, oh, wow, 5 green bars in a row. Shoot, I got to buy me some calls in that. Yeah, huh. Well, no, that works. There is literally something called a 5 bar rule, by the way. I don't know if it's superstition or anything else. To me, it just seems like a stock that has gone far enough and it just needs to pause. But there's a lot of traders who will quote the 5 bar rule and say, well, it's the 5th bar. It's time to take a break. So right now, yep, that's a good way to look at it. Yep, that is a good way to look at it. So, the red bar, green bar, it won't help you win or lose by itself. That's not why I do it. It's just to make sure that I don't buy overinflated options. So that's kind of my logic behind it. I'd rather buy calls on a red day and I'd rather buy puts on a green day just so I can get rid of that extra fluff that gets pumped into them when everybody starts piling into a green day with calls, and those calls just get really out of whack for no reason. I don't want to add to the juice, so I wait for red days. With Tesla, we've got this range that it's been building up, and we have to be concerned with these wicks back here. It tried to close this gap and it didn't. Now, that was all a part of that earnings too. Um, And speaking of the earnings, it had earnings, it dipped down, but it didn't crash and burn. And I think that that says quite a bit. But we have this line that I drew at 380, and every time we've gotten above that, it has sold off. Every time. Now, at some point, it's going to get above it. But is it done yet? I don't know. Nobody knows. I know that I would not want to buy calls at the high of today, at the high of a range that I just identified. I would wait for it to either get above those levels and continue on to the other side of it, or wait for a pullback so that I can maybe buy it along the lows down here where we've got all those wicks as well, because it was defended along the lows, 370 or something like that, right? Yep. And for those that don't know it, the 50 is at 385.75. It's right up here. That's the 50. So, I try to be strategic on that and try to think ahead of where I'd rather get into the trade. That's why on afternoons, I do try to look for these kind of bars because I know me. I love these sort of reversal bars. I like getting into them in the afternoon. It suits my style. We don't get those every day of the week. And then when we do get them, they're not always in something that I even want to trade. But I will cycle through the charts and look for them, or a big reversal bar like that, where we had that big gap up and then it dumped, because that really was a good signal. I don't mind that either. But I want something, something that gives me a tradable signal or some edge. Looking at what we have on Tesla right now, buying it along the lows would have been a much better trade decision because we had a good place to put our stops. We know where wrong is, and we at least had a little bit of edge. But now it's already ran up. It's at the top of the zone. We got all that previous rejection, a gap that ain't closed, and a 50-day moving average right over our head. Doesn't really inspire a lot. But markets have been running crazy. The stuff that's getting flow is getting a lot of it. And it just has been running through levels, breaking records on how far it can go. It's just nonstop push. So I've heard from a lot of traders who are really frustrated right now because they try to follow rules, they try to be conservative, and they get out and it just keeps running and running and running and running, or they don't take it because it was too overbought to begin with, and it keeps running without them. Things aren't pulling back well, and yeah, it's just kind of a messed up environment. Yep. You just have to develop a set of rules that work for you and then try to stick to them. No, I tried journaling that way when I started trading. I tried all kinds of stuff, paid websites, apps, spreadsheets, Excel. I tried all that stuff. And at the end of the day, I gave up on all of that and I journal with pictures. So taking a picture, there's also a problem with why are we journaling, right? So when I journal, I have a reason for it. I'm trying to fix something, I'm trying to improve somewhere. What I don't want is a trade record. I got in here, I got out there, I made X amount of money, I used this many shares, my stop was at this location. I'm not going to learn anything from that. 9 months from now, when I look back at it, I'm not going to look at it and have an epiphany of, oh my gosh, yeah, check it out. I see the light. No. But if I take a picture of something, I can go back and I can look at that picture. And for every new thing that I learn, I can take my new knowledge, my new insight. I can go back and look at one of my old trades and examine it with my new eyes. And I see my trades differently as I grow. I also get to see how I used to trade versus how I trade now. Those pictures are gold. I examine what I'm trading, why I'm trading it. I can ask all the questions in the world, and I'm responsible for the answers. I suppose I could upload it to ChatGPT and get some insight from them. That's not a bad idea. But the paid places that are documenting my trade for me and telling me shit that I already know, nah, I'm not interested. Yeah, OneNote's good too. I've got OneNote's built for like not necessarily trade journals, but trade strategies and various trade logic. I've used OneNote for that too. Gotta log in here. Are you you? So the number one question we get asked nowadays. Are you sure you're you? Yes, I am me. Let me in. I get the right app. All right, that's the right app. I right. I just got our taxes filed in the first part of April. And what did the government do? Sent me a letter in the mail. Can you prove that you're you? Are you serious? Fine. Yes. So that's what I had to do today. Sit down and log into the website of the IRS and prove that I am me. It's getting ridiculous. So this is a Discord that I've used to kind of talk about journaling a trade. I've got some old trades in here. This isn't my trade journal. It's just one that I copied and pasted some of my trades into for an example. Let's see, futures. Some examples of what it looks like when I trade, right? Take a picture, and it depends on what I'm working on. Am I working on adding more to a trade, using smaller stops, being more consistent with my exits? I usually have a thing that I'm trying to improve when I journal. I'm not journaling just for the sake of it. I think it's a waste of time. So when I do a journal, it's because I'm trying to improve something, some specific thing. So I take a picture, I focus on what it is that I'm trying to improve, and then I have a record of what the trade was, my entry, my exit, how much money I made, and then I have a write up that goes with it. If I need to, I will add multiple pictures of the same trade on different time frames. Maybe it's because there was something on a higher time frame that I used to take a trade and it wasn't on my trade chart, it was on another chart, so I had to add a picture. Risk reward is a big part of what I do, so I try to maintain a really high risk reward. One thing that I struggle with is adding trades, adding contracts to a trade when it's working, staying in, especially in the current environment, where you want to just lock in gains and get the hell out. I don't really have a lot of trades nowadays that last an hour and a half, 2 hours, 2.5 hours, but I did in a different market and I don't want to lose that. So when I journal, I will add in, hey, this was a good spot to add in, kind of examine the price action that we had afterwards and look at where I could have added more. Or if I make a mistake, say I fat finger and or move my stop too close, kick myself out of a trade, stay in too long, anything that I can document that can help me better understand the trade that I took and find ways to improve some aspect that I'm working on. I don't know. Everybody's got their own thing to work on. Maybe you want to get in sooner or get out sooner or hold on longer, whatever it is that you're working on. I have found that manually doing it is more beneficial to me personally. I've gotten so much out of doing things this way. I would never want to give it up. Now, where you store the pictures, right, could be anything. I like Discord because I can add video links, pictures, files. I can access it from everywhere, my tablet, my phone, any web page. If I've got web service, I can get into my Discord. So I never have to go, oh, shoot, wait, no, that's on an app and I didn't install that product and blah, because that's frustrating as hell. I want to be able to get what I want on any device, anywhere that I'm at, bring it up and look at it. And so I like Discord, but it could be OneNote, Teams, Slack, really just whatever works for you. But Marziti's right. Trying to stay consistent is hard to do, especially if you're doing the what I call trade records. I got in here, I got out there, I used 5 contracts and I made this much money and then documenting every single trade. I see people struggle with that. You don't have to do that, by the way. You can literally download that from your broker. Because what do? They track every trade you took, how many contracts you used, how much money you made or lost, and you can just download it. You don't even have to write that stuff down. And yet I see people write it down and they say, I'm journaling. Yeah. Tell me how useful that information is 6 months from now when you want to look back at it and see how your trade strategy is doing. Because it's just a bunch of numbers. These I can see my trades in here. The same trade that I've been working on for years that I take every day. It's the same trade over and over and over again. Yep, I'm a big fan of Snagit. I love it. Yep, yep. So journaling, if you've got a task that you're working on, journaling can really help you with that. Um, like 30 bucks or so. I bought it as a part of a video package too, because they have a video side and a so I've got it both and I can't remember what just the one part was. For anybody who wants to know, that it's made by TechSmith and they have good video editing software. When I make recordings and I want to edit stuff, I use the video side of these guys. I like it. It's hotkey run. It's really easy to learn. So I use yeah, Camtasia. So I use a lot of their products. Um, I'm sure there's cheaper stuff out there, but I like their products. I bought my wife their same products. She uses the picture side all the time. And I don't know, we like it. I like that I can add in my own stamps to things. Like I've imported all the stamps that I like, and you can make your own colors. So once you've made them and shade things the way you want it, use the font that you want, then you can save all that stuff. And you can add tags, all kinds of stuff, right? Just Yeah, right here. If we go to the stamps section, you can see like all of these, I imported them. Some of these were Discord stickers. Some of them were just emojis that I grabbed off the internet. So if I wanted to do something like that, it's that John Travolta one where he looks lost and confused. It's kind of really blurry because it's meant to be a small one, but you just import them, right? So these were mostly Discord uh, emojis, but you can get other emojis. And I just went on the internet and grabbed them and then imported them. Yeah, you can really customize this thing to do all kinds of stuff. I I think I started with Snagit and I added Camtasia later. It's really the way I think it went, but I've had it for years, so I don't remember if I had one first or the other. But I know when I was first starting out, I didn't have them both to start, but I just can't remember which way it went. It's been too many years. There's the pricing for people that want to know. Um, these prices surprise me. I don't remember it being $600 a year, but I probably because I don't have the Pro. I probably just have the essentials. Yeah, and then there's other companies that make assets for Camtasia, and um I've got assets that I paid like $25 for, and it's like I only paid once, and now forever, every month, this one website sends me their newest assets for Camtasia, which is kind of nice. I mean, I don't use them everything that he makes. Some of it's holiday stuff, and some of it's different intros of a beat that maybe I don't like. So I don't use everything that they make, but it's just this steady flow of extra assets that are always coming in that I bought. It's kind of nice. There's a lot of stuff out there. But I have found that if you don't have a purpose for journaling, you'll really struggle to journal, right? Because I mean, we are all busy. We all got life, and to just have this theoretical chore that you have to do every day just because, and you're not using the data for something, then you know how it goes. Eventually, you skip a couple days, and then you're like, oh damn, I got to get caught up. I'm behind, and then you look at how much work you have to do to get caught up, and it's the weekend, and well, yeah, that just gets thrown in the trash, and then you're done, and you have to start all over at some point. Or you go to journal, but you don't really have an idea what exactly it is that you're working on or what you want to work for, or what you're trying to fix. And then you don't exactly know, well, what information should I be gathering? Don't have a purpose for doing it. What exactly are you going to focus on? Entries, exits, the whole trade, the whole day, the collection of trades, how much you're losing, getting out too soon. You really don't know what to focus on if you don't have a project. So if you are going to journal, try to answer those kind of questions ahead of time. I think it makes journaling easier because you have an idea of what you're trying to focus on. And I journal options trades too. A lot of what I've learned on how a trade behaves comes from journaling a trade. I would look at the options chain and take a picture and then build my trade and put on the trade so that I knew, hey, what did the Greeks look like? I could go back and I can examine that picture. When I got in, it had this kind of vol, it was at this delta. Because I know me, I sure as hell would not remember that 5 minutes later, let alone 5 days or 5 weeks later. So I would have a picture. I could go back and look, and that helped. Where I ran into problems in that is options that, there's so many things that you might want to know. You can't fit it all on the screen. So taking multiple pictures of, say, a swing trade so that I could get what did the stock look like? I get a picture of the stock. What did the options look like? I get a picture of that. Maybe I get a picture of the skew. right? Maybe I get a picture of the risk graph at the time of the trade, and that way I've got multiple pictures to look at to examine my trade in better detail, have an idea about the trade. We don't usually talk too much about digging deep into a particular company, but there's times I've done videos on this. They're on the Bullish Bears YouTube. There's times where you might want to do a deep dive and really dig into a particular stock for a certain reason. So let's jump over to stock charts. What these guys had put together um, is kind of that deep dive. I am logged in. I do have an account here. Just go to my dashboard, drop down. We want to look at equities and the charts that they've already got put together. This goes into the deep dive in a different way than what I did in the videos. So here's portfolios. These are all just placeholders, right? Like these aren't mine. These are sample charts. So sample chart, stocks owned. We'll look at this, make sure I'm in the right spot. Johnson and Johnson, that's the one. So let's take a look at Johnson and Johnson. Maybe I wanted to trade in the healthcare space. Maybe I'm thinking about taking a look at Johnson and Johnson. Here's a little bit of background. I've got Johnson and Johnson as a stock in a ratio versus the entire stock market. Which one is performing better, the stock that I want to trade or the broader market in general? So that's one thing that you can examine between what's this stock that I want to trade and what's the rest of the market doing. And then, well, what about the healthcare space? I mean, Johnson and Johnson is a healthcare stock. How's it doing relative to the broader market? Is healthcare a good choice, or should I be trying to trade something else? Because if the broader market's outperforming, I probably want to trade something else. How about the Dow Jones Pharmaceutical Index versus the healthcare sector? Right, same thing, different way to evaluate healthcare in general because the stock that I want to trade is in the healthcare space. Or comparing Johnson and Johnson versus the Dow Jones Pharmaceuticals. Kind of getting a feel for, is it on the pharmaceutical side or is it some other part of the healthcare space that I should be focused on? Because if it's a drug, say like Ozempic or something like that, then I could focus on the company that makes that drug or focus on a different drug company if drugs are doing better than the average healthcare companies. Then we have the Johnson and Johnson stock, the RSI, just all of those, at least the CMF and the RSI are looking at the stock of Johnson and Johnson. And then we have the accumulation and the distribution and the on balance volume. Still, it's looking at that stock. And then we have the scooter ranking, and that's just a little in-house score that Stock Charts uses. A positive scooter score implies that it's a better trade. So a higher score, the better. The lower, the not so good. You might want to let it go. This is one single chart in that space, right? So if we were to overshoot this one and go back to where we were, in fact, I'll just put this into a chart list view. That first chart was there, and then we got this one. This is the sector chart for the healthcare sector. Because if I was looking at a trade in a healthcare name, I might want to know, hey, how's healthcare doing? So we can look at healthcare versus the broader market, healthcare itself, which is this stock, RSI, accumulation, distribution. If it has dividends, it's got that on there. We can look at the industry as opposed to just looking at the sector. All right. It's the whole idea. If we want to do a deep dive in something, how deep are you going? Are you looking at its peer group, the sector that it's in, the industry, how all of that is performing against the broader market? Is the one stock that you want to trade the best name in the list, or is there a better name? Maybe it's got better prices, better options, better liquidity, a better looking chart. Or are you picking that name because it's the one that you came across and you didn't even bother to look at any of its peers or the group that it belongs to or the sector that it's in or the industry that it's in and how that industry might be performing against the broader market? So like I said, all these charts were put together. It's strictly on Johnson and Johnson, but of course, um, I can swap the name out for whatever name that I wanted. Just build these out, right? If I was focused on doing a deep dive on a company, I want to know as much about that company as I can. Because if I'm going to use a lot of my portfolio, tie it up for 6 to 9 months, and get a really large trade on, then I want to get as much information as possible that I can skew the odds in my favor a little bit. Maybe find some warning signs along the way. Nothing really stands out in what we're looking at. This isn't revolutionary stuff, right? And the hardest part of what I'm talking about here is how to find all these various ratio charts. If you didn't know that there's a total market ETF out there, then now you do, right? There's one for the whole world, there's one just for the US, one for Canada. You can break it down into different sectors, different industries. There's cap weighted versions and equal weighted versions. And you need a charting platform that will allow you to make ratios like TradingView. You don't need a stock charts account to do a lot of the stuff that I'm doing here. You can do it with Thinkorswim, TradingView. You just need a place to be able to put ratios together. Doing work like this might help you decide which of the names, say in chips, semiconductors, which semiconductor name do you want to trade? If you were able to compare them individually to their sector or industry and then compare them against each other, maybe you pick the stronger one in the group. By default, you could, hold on, I can't type and talk. By default, what I like to do is pick the name with the largest market cap. And if I choose that one and I don't like its options, then I'll start working down the list by market cap. I tend to want to get the biggest one, the strongest one, the one that has the best institutional background, but that doesn't always work. But as a default, man, that's just a good approach. If you got a list of, say, 5 pot stock companies, I would sort them by their market cap. That'd be the first thing that I would do, and then look at them from that perspective. So I thought this would be helpful. We don't talk about it very much, and I didn't really have a big list of things to cover today, so it was worth bringing it up. I'm not paying for it. Yeah, yes, it's an absolutely awesome reason. I am paying for Finviz. This is my money. I bought it for a year, but for everything else, well, I take that back. I'm paying for stock charts. This was like the first platform I ever used when I was new to trading, and it has some tools that I can't find anywhere else. But otherwise, just about everything else, Spot Gamma, Trading Ticks, is either been gifted to me or somebody has given me their access. They didn't want it. They don't need it. I have an affiliate, something like that. I like it. I mean, it has a lot of moving parts, right? So during the day, uh, I don't know if this really fits. This isn't swing trade talk, but we're gonna do it anyways. During the day, Spot Gamma has a 0-day tool that is kind of awesome. Um, I always got to adjust it. So just give me a second here. Put that on 1 minute and we'll change the color here a little bit, knock the heat map down some. like a 2. We want SPX. And let's go with the light chart. There we go. Well, I guess light isn't going to help me now. When we were at the low a day, that light chart helped me spot those reversals. These reversals are fantastic. I love these reversals. So what I like to use this for is I'll just be hanging out here and I watch for these reversals. And it doesn't have to be, like that was a reversal, it didn't work. That was a reversal, it didn't work. This was a reversal and it kind of worked, got a little bit higher. But what I'm tracking is this blue line. The kind of white line back here, that's the SPX. That's fine. I mean, I don't mind that it's there, but that's not what I'm watching. I'm just watching this blue line. And I'm looking for these reversals. Go back today to 1 o'clock with that reversal right there. Watch, look at the market and how it turned around today, or at 11:45 today with that reversal. It really kind of lines up. If I can mark those out with the low of day at the same time, I am much more interested in the opportunities for how long am I going to keep my trade. All right. So here's 1 o'clock today, 12:55. We had the pin bar reversal and we had that big explosive bar. And we ran up to the high of day. And what did we have? The V bottom on that tape signal on spot gamma. And even though this paused here, that tape didn't. It V bottomed and it was just going. It didn't really pause at all. So I can look at CD on TradingView. I can look at the price action on my chart. I can look at that tape with the V bottom signal, and I'm much more willing to stay in my trade and not get all out right here. And like I normally would when I get in a run like this, I normally just get out at the top, but I'm more willing to hang on and give it a little more room. Maybe keep my stop a little farther back than I normally would have. Not a stop that is sitting in loss, just it's not as close to price because I don't want to get wicked out, and just let it ride. And that's what I use this for intraday. Otherwise, I'm looking at Hero and I like Hero. What? I broke it? No, I didn't do that. I like Hero because it'll show you the total accumulated tape. Right? I usually leave it on next expiry, not all trades. And I use the upgraded version, show it so it shows TradingView. Of course, it's sitting on Tesla right now because that's what we were looking at. It works on the ES futures, so I like that. You just have to make sure that you go in and change the settings so that you have the overnight hours. And if I see a radical change in the options structure, then I know something's up, and I like that. So it's really useful. Now for swing trades, I got to say I don't use the swing trade tools that much, but that it does have swing trade logic in here. And of course, every day I share the founder's note. We go through the I share the levels for your charts, so everybody has those. And if you want to use this, you should really read the PM edition founder's notes, because in those founders notes, they use that same tool and they'll say, look at what we saw today. This was a really great signal in Tesla, Nvidia, whatever. And they'll highlight the signal that they saw using their product, right? And that's awesome. They don't do it every day, but I've got a whole file where I've cut out the pictures that they shared where they were like, oh, we saw this great signal on the Hero today, and this is what it looks like. When it does this, you want to go long or you want to go short. And that's awesome because they tell you exactly what it looks like. They circle it, they describe it. And so if you're interested in using their product, make sure you read the founder's notes in the nighttime, because that's the one where they explain what happened during the day today and certain signals that they picked up that they thought was useful or valuable. and you can learn from that. Yeah, they're founders notes, and I share the founders notes every day. So you can look back in the Discord for the last couple of years and find the founders note for every single day. I don't It's not as bad as some that are out there, to be sure, and they are paying some very high data prices. That's why it's expensive. They have to the nanosecond data. Like it's serious, right? And hey, I need that. Get back here. And that data is not free. So they got to coop their money. Voland is another one that has very expensive. It's more expensive than Spot Gamma. Hero is Spot Gamma. Yeah. Yeah, Hero is Spot Gamma, and Spot Gamma is expensive, but Voland is even more expensive. I don't know if it'll let me bring up the billing because this is one of those where I don't pay for it. But the subscription that I have, as you can see, it's $1,000 a month. Now I don't pay for it, so it's not my $1,000, and I don't have the highest paid tier system here. You know what I mean? Like there's higher levels than mine. So when I say Spot Gamma is not that bad, it's not that bad. Right, there's 2 founders notes. There's a PM edition, so tonight after the close, probably around 5:30 or 6 o'clock, they will put out the PM edition of the founders note. And then tomorrow morning, usually before the open, they'll put out an AM edition founders note. So in the AM, they'll tell you what economic events are on the table, who's got earnings, and ideas on what you could be looking for. In the PM edition, after the market is closed, they'll tell you what happened today and what signals they spotted with their tool that they thought was tradable or not. And it'll give you some insight on where they think we're going to go from here. It's almost like two different people write it because the writing is one's more like a swing trade and one's more like a morning briefing setting up for the new day. And of course, with AI, um, I've heard people tell me, "Hey, I don't understand option stuff," right? So that they just flat out like, I tried to read it, but I don't trade options, so it didn't make any sense to me." And they just stopped right there. No, like, they had some very clear words in there, like this is your buy level or this is your sell level. Because when they do the AM edition, they'll oftentimes say if it breaks above this, it's a buy. And if it breaks below that, it's a sell. Well, I don't care if you trade options or not. That sounds like plain English to me. But the people I was talking to never read it that far. They just ran across some Greek data and said, no, this is all nonsense. I can't understand this. And they just gave up. Well, we got AI now, so nobody needs to give up. Just take the whole thing, feed it to AI, and then ask it questions. This is a PM edition, right? It says PM note, and it's talking in this about what happened in the Wednesday's session, gives us a little insight about crude, the SPX, gives some options talk down here, what they saw that was happening through the hero flow that day. And if you was looking to use hero, learning what they're looking at from reading their posts will give you insight on what you can look at when you're using the same tool. They don't always talk about the same tool every night. So one night it might cover hero, one night it might cover the tape, something else. But every night, the nighttime one seems to be more about education and how to use the tool and how they used the tool to make money. Whereas in the AM, it's more about, okay, let's get ready for the day, watch these levels, because if we break here, we're going here, blah, blah, blah. Yep. Before I go live, usually. I mean, sometimes I don't get it done until after I'm done with my morning briefing, but I definitely get it done before the market opens. I put it out in the morning. I leave the office after 4, and I'm not coming back in just to do something like that. Yeah. Yep. At the bare minimum, you should check it out, learn something from it, and get some trade ideas. Now we're at the end of the month, so my pullback scanner isn't going to have the best signals in here, and it's got a lot of signals. It's got 87. It's too many. But and tomorrow we'll be on a new day, and then we'll be able to look at some bullish swing trades on a pullback. So there's 4, but that car is trash. Irene's not bad. Roomba in BIS. Yeah, there's a pullback to the 20. If we cross back through the 10, that'd be a trade. Forming a little micro cup up here. I'd be happier with a daily cup, but whatever. If we get back above that 10, there's a play to the upside. Finviz it's not bad, for a product. That's broke. I don't want anything to do with that. And moving averages are tangled on this. It's not really all that good. Micro systems breakout. They got earnings real soon. Affirm. It's in that tight little wedge down here. Just came back to the 10. This has $80 written all over it. If 60, then 80. It got up close to 70, pulled back into the 10. Yep. It's got earnings. No, it's got earnings coming up real quick. May 7, after the close. Still, that doesn't look bad. One of the things I like about Finviz is I can sort my stuff that I find by the sector or the industry that it belongs to. And that's not unique by itself, but it ties in well with everything else. So I've got 92 names in my bullish swing scan. And if I wanted to tighten that up a little bit, then I can do themes. So I can look at, say, artificial intelligence, and then I have a sub theme like healthcare, for an example. I would find healthcare and AI should data, edge, power, energy. Where's my healthcare? Well, that's custom, I guess. guess that one. It's not what I'm looking for. Yeah, it knocked me down to 9. So now we're looking at artificial intelligence, compute, and acceleration. And it just knocked my list of 92 names down to this specific theme that I'm interested in. I didn't have to use themes. I could have done a sector or an industry or both. But yeah, I like it's a pretty handy scanner. I like Thinkorswim. Thinkorswim's got a good scanner. We were talking candle patterns the other day, and here on the homepage, we've got these trade signals, wedges, wedge breakdowns, triangles, descending triangles, channels, double tops, multiple tops, double bottoms, head and shoulders. And every day I come in and I look to see if I recognize any names in there. A lot of times I don't recognize the names, or I recognize them just enough to know that I don't want them. But sometimes I see a name that I like, right? Like there's Uber. AEP is another one. So I like that. I don't have to code anything. I didn't have to put in any information. I just come in every day and look at what's in the signals. And if I recognize any names, then I can dig a little deeper. It's got a lot of data here. Bullish names that are under their 50-day SMA. Car. I don't give a darn about car. Irene is above, but only 8%. The rest of these are like blowout levels above. Way too high for the 50. Guess we can look at the 20. NBIS is below the 20, but only 3.25. Or that Roomba that we looked at, 1.25. Lunar's at the 20. Let's look at Lunar. Oh, nice reversal. And down it went. So much for that reversal. So we were just on the intraday, and it's creating this wick right now. It's falling back down. So not so good. But that reversal yesterday, I really like that reversal bar. If this holds and it doesn't crash through the midpoint of yesterday, that might be a nice reversal play. It's not crazy expensive, $25 stock, but it just got whacked. I don't know what happened, what news came out that sent it down like that, but that's not good. See what these options look like. 22,000 on a stock of $25. It's not bad. I mean, you kind of get used to SPY size options, and then you look at something with this much liquidity and it just feels like you're getting robbed, but it's not bad. A lot of out of the money puts. And they are running above options put volume. But likely that's because it's taken a beat down right now with our runaway stock. Look at the ES go. These are really good trade days. It's been a while since we had one, so get it while you can. We're almost to 72.50. That'd be the next 1, 2, 3, 6. The hottest sector today is industrials. The worst sector is technology. And VG is again the strongest stock today. Got an intraday price target for SPY of 720. I think this is a good day to do what I'm about to do. So today we got a rare day, right? We got this really nice reversal mid-morning, and we've been running strong since that reversal is around 10 or so. I've got a market logic that says if we haven't broke out by 10 a.m., we probably won't until after lunch. And this thing returned and started going to the upside. It stalled out down here around 10. It didn't break down and go lower, and instead we came back in. So we were looking for a break to the upside, and then we got this afternoon run. Now, these afternoon runs oftentimes just really eat people alive because they try to short this and they try it and then they get chewed up and they try it again because they keep thinking, oh, now it's done. Now it's going to turn. And then of course it keeps going. And then they think, oh no, now it's done. And then it keeps going. How can you tell if it's done or not, or if you should even begin to participate in it or not? One of the levels that I like to use for this kind of question is the weighted AD. If Thinkorswim will wake up, it's kind of frozen there. Hey, there it goes. So the weighted AD, I use a level of 250. If we're on a bullish day, then it's 250 to the upside. If it's bearish, then it's 250 to the downside. I want to see the weighted AD get above 250 if I'm looking for a bullish day. If it looks bullish in price, but this isn't above 250, then I approach with caution. It doesn't mean that I won't trade it, but I'll be very cautious. I'll take profits quicker. I'll downsize my position. I won't trade as large. And I just really don't trust the bullishness of the move if we're not at 250 or better. And I marked where 250 is. You can see we're well above that. We're almost at 700. This got above 250 around the time that we turned around that 10-15 time frame, and it's been above 250 since then. It's been in my this is bullish space since that time, all the way down here near the low of the day. If you look at the tick during all of this, I added these colors, but this is just $ TICK. If you're on Thinkorswim, that's the symbol, TICK, with a $. All I did is got rid of the candles and turned it into a line and put it on a 2-minute. All right. So there's nothing special about this. It's not even an indicator. It's just price. But I added, with my drawing tool, I added these clouds and lines behind it. So I marked out the 0 line, and we can see that price has been holding pretty much in the green above 0 all day. Yeah, we dipped down just a little bit. We wicked down and we came right back up. And then around 12:30, closer to 1 o'clock, we actually was crossing back and forth not perfectly symmetrical, but we were what I call zipper right here. Right? Like back and forth, above and below, above and below. Not really bullish, not really bearish, just hovering in the zone. And when we're in that choppy, zony system like that, I'm not bullish, I'm not bearish, I'm not even looking for trades because we ain't got nothing. And then it came out of that. We started getting these higher lows and we started getting higher highs. And then we got back into the green space and pretty much stayed there. So I like to see that the ticks are on my side. I don't want to see -5. Definitely don't want no -750s or -1000s. I want to see that we're holding in a good bullish tick, and I want the weighted AD to be plus 250. If it's a bearish day, just flip over everything that I said. That by itself is a really good tool, and it's a good combo. They take that same idea and add to it. Well, what else could we add? We've got the cumulative tick. This is one indicator that I don't have on TradingView. And that's because while it has cumulative tick for the NYSE, it does not have the cumulative tick that I need for the NASDAQ and the Russell. So if I don't have those, I can't make this indicator there. Otherwise, I already would have. So I look at this through the day too. And if things are wonky or they're just off, they're not right, then this will be negative, or we'll get like today, the green line isn't leading this dominance to the upside. So we know the market is bullish, we can see that, but it isn't coming from the usual suspect because usually we would see this green line not only above zero, but it would be above all the other lines. It leads. On my best bullish days, it'll be leading to the upside. And if it's really bearish, it'll be leading to the downside. And we don't have that. So that would be a warning to me. We're in positive territory on all three lines, but the green line is lagging everything. I would I would be looking for trade opportunities, but I would do it with a bit of caution because of that green line. I've wrote about that, by the way. It's on my blog post. And then, of course, you got the weighted AD or the advancing minus declining issues on the NASDAQ and the S&P. Those are more big picture stuff. Are we positive on the day? By how much? You know, how many companies are positive today? How many companies are negative? This doesn't really help all that much for trying to gauge how strong a bullish or a bearish move is. For me, this doesn't help. Because if a stock is above its open, it's counted as advancing. Well, that doesn't mean it's actually moving somewhere right now, right? So that's why I don't find it helpful. It can be above its zero line and be falling for all I know, right? But it would still count as being an advancing if it's above that zero line. So I don't use this to gauge how strong the bullishness or bearishness is. Then we got banks and Mag 7. Now when these two are working in a in a team, they'll both be up, they'll both be above VWAP, they'll both be pushing higher, and that's exactly what I want to see. If they're divergent, then I know that it's either the NASDAQ that's dominant or it's commodities, treasuries, banks, S&P that's dominant. So one side will be up, one side will be down, or one will be lagging. I look for early turns here. Like you can see that banks are turning around. They're not crashing and burning, and we've had a nice channel running here. It looks like it's just going back to the bottom of the channel for all I know. But they are red and weak for 3 or 4 candles, and this is still green and pointed to the upside. So they're not in sync. And it looks like both of these are above their VWAP, getting a little too stretched. We're going to need to pull back soon. So it's a bit of a warning for me as well. And I tie all that together on bullish days like this. I am not the person who's sitting here trying to short this sucker every time I see a red candle or a wick and then getting run over and wondering why we're not falling, because I'm able to validate that there's a lot of strength backing this move up, and I don't want to try to be the guy taking a short. Works for me. It's been really helpful to do that. Now, of course, that's not going to get you in a trade, right? That just helps you answer the question, are we there yet? Are we done yet? Does it have any juice left? Or does it even have any juice when it's first starting out? Right? When we first started, it was all the way down here, and we crossed the plus 250 level after that last big red bar there, that like hammer candle right there. This one. We got above the weighted AD plus 250 level after that bar. Yep. Not bad, right? 10:15 this morning, my bullish signal activated. Then we just bring in all the other pieces to continue to confirm, is it still bullish? Does it still have strength? Is it still going? And then of course you can look at things like the VIX or treasuries, things like that. NASDAQ on the right, then the VIX, then the ES, and then the tick and the weighted AD. Here we've got the ES on the right, the VIX inverted in the middle, then the BXM and US 30, JP 30 on the left. They'll all be in sync or not. The not part kind of tells me that we're losing flow or that something is starting to unravel. Otherwise, if they're all in sync, then you got confirmation across treasuries, volatility, options, dealer positioning. You've got it all in sync, all helping with the push. There was a lot of people that was talking about trading the Mag 7 earnings and was asking me yesterday before we reported, like what kind of earnings trades were we going to do for Apple, Amazon, Google, Microsoft, blah, blah, blah. And the trade that I came up with was the mags, right? Trade this. If you want to get long in the Mag 7 right now in earnings, it's really expensive options. You could have bought a call in this yesterday for 50 cents. You can see it's got 22,000 options on a $66 product. So it's not wow numbers, but it's not bad, really. 40% of the options traded are at the money, between a 40 and a 60 delta. So near the money, at the money. That's the put side anyways. Call side's just all over the place, but mostly out of the money. So what does it look like? They're selling out of the money calls and buying at the money puts on the mags. Maybe they know something about Apple tonight that we don't know. I don't know. But I was shopping around for the May 15th calls, looking at the 70 strike. And, well, maybe we want to look at something with a little more open interest. 69, I remember looking at 69.71 yesterday because it had a lot of open interest yesterday too. If you bought that call vertical, it is 28 cents. Now, when I priced it yesterday, it was 50 cents. And I said, well, if you're going to do that, you could just spend 50 cents and buy the 69 strike. And it was 50 cents yesterday. So that trade is like down 5 pennies. It's not bad. It's still a good trade if you think that collectively the Mag 7 is going to go up after earnings. That's a good way to play it. It's 2 weeks out, gives your trade time to mature. And the most you have to risk is split the difference here. Maybe 38 cents. There you go. 37 cents. Work that order. It's not bad. And then, of course, I was looking at Bitcoin stuff. I don't know if you guys really get into trading the ETFs of Bitcoin, but there's different ones. right? And then you got to figure out, well, what's the better one? Who's got better options? Who's got a good price? So ARKB, believe it or not, is a pure play on Bitcoin. It's not tick for tick perfect, but if you want to trade Bitcoin, this is a real pure way to do it. They actually buy the Bitcoin. Not all of these ETFs do. So they keep it in cold storage. They're not using the futures. This is a good product to trade, and it's ARKB. Not necessarily the most liquid in the group, but I like this one when I'm running analysis, even if I'm not interested in necessarily trading it. Then there's BITO. This one trades the futures of Bitcoin. The good thing is it has dividend. The bad thing is you can end up with contango when they're rolling out of the expiring futures and they're trying to get into the new forward futures. You can get some contango in there. But other than that, this one's not bad. Shorter duration, shorter term trading. You don't really want to use this one for swing trade stuff. But short term, say like a month or 6 weeks, maybe the most. Yeah, it's a good play. And IBIT. This is another one that actually buys Bitcoin. And this one is one of the more liquid ones to trade. Now, there are others, but these are the three that I tend to focus on. I know that some people really hate Bitcoin and then some people really love it. Well, this gives you a chance to trade it without having to go get digital currency and get a Bitcoin app and any of that stuff, right? Just trade what you know. So here's IBIT, 404,000 contracts traded today. I mean, that's some good volume. Yeah. It's not bad at all. They're getting it. And look at the price. It's not even a $50 stock. So good liquidity. It's not crazy expensive. You know, even the chart itself, it's not nasty. I mean, it's got some gaps, but you know, everything nowadays seems to have a gap in it. I like it. I'm bullish on Bitcoin, by the way. If we're going to see everything turn around and finally begin moving up, then I think as a risk asset, we're going to start seeing Bitcoin make that move too. We've already got a break over on the trend line. We just got this gap to close, you know, and then this gap one at a time. Got a gap up here. And really, this is just the cap. The gap is actually right there. What you guys want to look at? Don't get scared. Are you messing around with any earnings trades? I remember when I first found them, I was so excited because I had been doing all that data manually, and they just had all these statistics and numbers. I was fascinated. And since I found them before they really blew up, I had grandfathered in at a nice price. I mean, I had a really cheap subscription. But after using it for a little while, the novelty ran off because I'm so used to doing all my work manually, and I don't mind the work, you know what I mean? Like I learn things when I'm doing the work and I think of new things and it just kind of feeds the machine. But when I was using their stuff, I kind of felt disconnected from all of the data. And it's not that I didn't trust it, but I wasn't getting the aha moments with it. So I finally let it go. And I don't necessarily miss it. It'd be nice once in a while to be able to bring it up and have it at my fingertips. But I think what the best thing I got from Edgeful was a validation of trust. That I already knew my stuff was good, but it was nice to know that I wasn't the only one out there looking at that same stuff. That they are looking at the same thing and they've turned it into an industry and people are interested in having those numbers that give them those kind of confirmation biases. Not sure how useful something is if you can't trust it or if you don't understand it. And one thing I've learned is that a lot of the people that I see struggling with trading, they just don't understand what they're messing with. And of course, then they don't trust it. Having Yes, absolutely. So if you guys are wanting to trade a pattern or a setup and you're looking for data, that that's a good place to go. One of the questions I get from a lot of people is, well, how often does that happen? Or what's the odds of that working? And they have those kind of numbers, right? Like that's really going to help give you some answers on probabilities and statistics, occurrences, but you got to find something somewhere that'll give you the courage and the confidence to take your trades and to trust your analysis. Yeah, I got a market phrase that says if we haven't broke out by 10 a.m., we won't until after lunch. Now that can mean quite a number of things, but it mostly means you're going to end up having to look for a 30-minute range because you need between 9:30 and 10. What have we done? If you've ever seen a day where at 9:30 we open and we just run like we ran this afternoon, say this is the bell at 9:30, we ring and we just run like that all, you know, yoo-hoo. Well, then that's not the day we're looking for, right? It's going to be one of those days where we opened and we set our first high of the day and our low of the day. Think of an open range on a clock. You got a 5-minute open range, a 10-minute, 15-minute, 30-minute. But what if you're on a tick chart like me and you don't use minutes? How do we define an open range? I use first pivot high, first pivot low. So for yesterday, first pivot high would have been the open, that first 5-minute bar, and the first pivot low would have been down here. So there's my high, there's my low. We broke out of it. That was a fake. We went the other way. But that's my open range for the day. First pivot high, first pivot low. And in that, if we haven't broke out by 10 a.m., we probably won't, or it will fail. That's the other part of the sentence. There's the 10 a.m. We did finally break out of it. It failed. We came back in. It wasn't a real breakout. Now, what can screw this up? 10 o'clock news. That can totally screw this up. 10:30 news can screw this up. On Wednesdays, we get 10:30 news. It's the oil report. On Thursdays, we get 10:30 news. It's the gas report. Either one of those can screw up that logic. But otherwise, if we haven't broke out by 10 a.m., we won't until after lunch. Or if we do break out, it'll fail and we'll come back in again, unless it's news. So every day, it's one of the things that I ask myself. Like this low today, when we turned around, the first thing I thought of when we started to turn around and we was hovering here, it was actually back here, and we were just hovering here, chopping. I thought, hey, look at that. Hey, look, we're done. We're done. Now maybe we'll break down at 10:30, or maybe we'll break down after 11, but otherwise we're done. And I didn't know it was going to turn around. You know what I mean? I'm not psychic, but the move down, I was pretty comfortable that that was shut down until at least 11 o'clock, because we didn't continue to go lower after 10. That's my logic in play there. Now, did I know it was going to turn around? No, I didn't know. We had to let that play out. But this did form my half-day wedge breakout. I've got videos on that one on YouTube as well, for the Bullish Bears YouTube. Half-day wedge breakout. And funny enough, even this little part, I've got videos that shows just that right there in this same half-day wedge breakout. I swear it would look like I copied and pasted today's price from way back then. And that's why I keep saying these days repeat. They just repeat over and over and over again. Because I've got probably 3 different dates and pictures of this exact same day. One of them I turned into a YouTube quick video. It's like a 20-second video that I made. So Al Brooks has the same kind of logic. He uses candle counter though, odd numbers, 1, 3, 5, 7, 9. And he's got logics about whether the low of the day will be the low and by what percentage point. If it's the bar number 8 or 9, whatever his numbers are. I went through them a while back, but there's a lot of those kind of logic out there. I am a big believer that most days we will unwind the move. So if we went up all morning, we're probably going to go down in the afternoon, or we'll just go sideways for the afternoon, right? It doesn't necessarily have to go down, but it's likely won't continue to go in the same direction in the afternoon that we went in the morning. We'll either go opposite or we'll just stall out for the rest of the day. And that's because if you look at price, how many days do we have in a month where we opened and just ran and ran and ran all day one direction? They're like 1 in 20, right? One day out of the whole month that we do something like that. So that's where I like to do those 0-day trades. You know, when people like to sell premium and do credit spreads and that sort of stuff. I love to do those on days where we ran a long ways and then we put in a bottom or a top and we flip. Those days are awesome. We had one on Friday of last week. Although I got to say it came too late in the day. I would rather have that reversal around like 11 or 12. This one came in like 2 o'clock in the afternoon. I don't want it that late, but that's a good example of what I'm talking about. We make an outsized move in one direction or another. Say we get to my ADR lines and then we flip it around and we go the other direction. I like those. It suits me well. You just do it without thinking, right? Just follow the for years I had this indicator, but I could only look at today's price. I could not look at yesterday's lines. And then we got AI, and I was able to talk to AI and have it help me add previous days so that I could look back. So I had to learn to trust this by taking pictures every day and saving them up and then going through the pictures and really remembering what had been going on a day-to-day basis. And what I'm looking for with these ADR lines is for price to stay within the lines because that's what it's supposed to do. It's a 21-day average daily range. So in 1 month, what has price generally done? It went up and it went down within the confines of the red lines, up and down within the confines of the red lines. And if we get to the edge, we're likely going to turn around and go the other way because price is just expected to stay inside the red lines on a day-to-day basis. Just keep doing that. Stay inside the lines on a day-to-day basis. And as long as we don't get aggressively bullish or bearish, we should just stay inside the lines on a day-to-day basis. Now, if we do get bullish, we'll go to the yellow. Or if we do get bearish, we'll go to the yellow. But if we're just doing our thing, we had up days, we had down days. And in fact, let me back up a little bit. We turned here, started moving to the upside, up day, stayed red in between the red, up day, stayed between the red, up day, stayed between the red. Two sideways days kind of pushed the lower edge, but at the end, we stayed inside the red. Another sideways day, and then we started working our way down, staying inside the red. Back up, same thing, stay in the red, stay in the red, stay in the red, stay in the red. That's what we do, stay in the red. So if we get to one edge, especially if we get there kind of early in the day, you know what I expect? That we turn the hell around and we go back the other way because we're supposed to stay within the edge, stay in the red. Unless I see signals that say, oh, damn, we're really bullish or we're really bearish, then my expectation is we're just going to stay in the red because that's what we do. Now, how you want to trade that? Because you know everything you need to know. What's price going to do? 9 times out of 10, it's going to stay in the red. And if it doesn't, like today, we were so amazingly bullish, we knew it wasn't going to stay inside the red, right? I already showed the weighted AD and the ticks and the banks and financials, the advancing and declining issues. Everything is signaling a bullish move. So when we went back to the red again for the third time today, wasn't much of a surprise that we expanded beyond it and kept on going. Otherwise, on any given day, we get to the edge. What do we expect? It's just going to turn around and go the other way. The sooner, the better. Because if it gets there at 2 o'clock in the afternoon, well, I mean, that's not really all that helpful, right? So if it gets there at 2 in the morning, that's not really all that helpful either. You know, I'm sleeping. Yeah, if we get to the edge and we get a real beautiful reversal signal, I mean that's just like the gift from the gods, right? The trading gods reached down and smiled on us and gave us a gift. But a lot of times we don't get that really beautiful price signal. You know, we get up there and we chop around and like slobber all over it. And then we finally leave really late in the day. You're like, great, but that wasn't really helpful, you know? So this is doable. This one's doable. It's not bad. But the ones where we get there and we just stay and stay and stay and stay and it's sloppy and it's nasty, I don't like it. I want a nice, good, clean reversal. A screw you, get out of here signal, you know? And when we get those, it's fantastic. Those are the best ones, right? Those are the best. Like this one. It's too late in the day, but I mean, look at that reversal. That's awesome. I'll take that. Thank you. That's yes, please. But, you know, we don't always get those. Sometimes we get the really ugly, nasty ones, and then we're like, "Well, what am I gonna do with this?" Or it'll miss, right? Like this one. It wasn't at the yellow line, but it wasn't at the red line anymore either. So then it's like, well, that's not the ADR signal that I'm looking for. I'll have to use, you know, price or something else. A lot of these days that I'm scrolling past, they didn't even get to the red line. Or they got there, there's a good example. They got there and it just kept hanging out there. There wasn't a good signal here. It was just hanging out, lots of wicks and hanging out some more, and then it broke down and like, thanks, but that's not what I'm looking for. I want to. The day before was a tightly wound Globex and a tightly round sideways day. That was a Friday and then a Sunday and to a Monday. It could have been a triple witch. Could have. That no, that was December 26th. That was the day after Christmas. So it kind of explains the choppy, sloppy, nasty. Yep. Here's the logic that if we get to one on one edge early enough, we can go to the other edge by the end of the day. That's the logic, right? So then you monetize it however you see fit. I know some people that don't care if it has a good pattern or not. They're just going to take it. Others are going to want a really good pattern. Some will ignore it. I can't tell you how many people actually ignore it. We get to the red line and they say, I'm really bullish today because we made it to the red line. Now I'm going to go long because we went all the way up and we hit the red line. Like, okay, I don't know how many times I got to tell you that's a really bad idea. And they do it anyways. They get burned. More often than not, they get burned. Yep. And then they're like, yeah, no, that didn't work. But you know, I felt really bullish because we got to the red line on the upside. Yeah, I don't know what to tell you. I keep telling you, don't do it, and they just do it anyways. People don't like their money. They're mean to their money. I try to be nice to my money. Yeah, you got to be nice to it. Give it friends. Give it more money. So the good thing is options traders can use it, futures traders can use it, and it works on everything because everything's got an ADR. You can even put ADRs on things that aren't stock, right? You can do like options price if you want to. I haven't done it, but options prices have range. So in theory, you could even do that. Everything that has a range can have an ADR to it. If I'm at the computer, I can. The thing is, the hero is mostly going to give you the intraday signal. Like that's what it's designed for. So I don't know what kind of trade you're taking, but if you're taking a 6-week swing trade, looking at it in hero isn't going to do you any good. Yeah, if I'm here, I would. But a lot of times I'm in the office, but I'm either in my own trade, so I've got everybody muted, or I'm with a client. I don't work at the Bullish Bears full time anymore, and one of the reasons for that is I'm doing my own trading. But I am here, so if you can get my attention, then yeah. And a lot of times I'm not doing anything, right? Because I'm not trading like all day. But say today, for an example, that 10 a.m. reversal, I was catching. You two have a good one. I was building into my position to run this up, and I had nonstop questions on Discord, and I just had to take what I had and just write it up with the little bit that I had instead of making my month right here like I was supposed to. Yeah, I was building into a position, so I was adding to it here to run it back up. And I mean, I still got the move, and I had a couple points, but I was trying to help somebody on Discord, and that was taking up more than half of my space. And finally, I was like, screw it, I can't do both. So I just left what trade I had and let it run up and help the person instead. But it gets to the point where I'll just mute things or drop the Discord down where I can't see it and do my trades. If it takes me 30 minutes to get my entry and I'm in it for 30 or 40 minutes, then an hour's gone by. But right. Yep. Yep. You can certainly go through the levels that they provided and see what they're preparing for. Well, guys, that's what I got. Unless anybody's got questions, say we wrap it up. Yeah, everybody, if you got questions or you got a topic you want to hit on, let me know and we'll cover it tomorrow. Yep, you too.